Blog Talk Radio.
Here we go. Blast off.
This is True Capitalist Radio. True Capitalist Radio.
I am your host, the man they call Ghost.
The badass of business.
Give him capitalism or give him death.
That's it. Period.
Broadcasting from his Skyline office studios in beautiful downtown Austin, Texas.
You sound fruitier than a box of Fruit Loops, for Christ's sake.
And now, he'll take it from here. Your host, the prognosticator of prognosticators, the man they call Ghost.
Oh, man. What's going on, folks? And thank you for tuning in with me to another edition of True Capitalist Radio. And, of course, folks, I am your host, the man they call Ghost. And once again, folks, I want to thank everybody for tuning in with me. Jesus Christ, I'm stumbling over my own tongue over here, for Christ's sake. It's episode number 126. For all the folks that are keeping track of the True Capitalist Radio broadcast, that's 126 episodes of yours truly's broadcast, for Christ's sake. I mean, have we actually been on for that long, engineer, for Christ's sake? I mean, Jesus Christ. Actually? Yeah, I didn't even realize it. Anyway, folks, I want to thank everybody for tuning in with me. I know that the title of the episode is a little bit deceiving. At the time that I input this episode for today's broadcast, the equities markets were actually on the increase after the Federal Reserve minutes were released to the public. And in those minutes, it described how the Federal Reserve is entertaining the idea of what I've been saying these idiots were going to implement all along, even though they didn't even know it. So I would just like to say that the prognosticator of prognosticators strikes again. Because in the Federal Reserve minutes, we have come to learn that they are entertaining another episode of quantitative easing. That's right, quantitative easing 3 coming to an American economy near you. And that's why I'm saying, folks, we saw a spike in equities after these minutes were released. And unfortunately, as the day started to wear down and the closing bell drew near, we saw a lot of helter-skelter equities investors literally just pull out the market. All right, I mean, just literally just pull out of the market, and we were just completely down. And if you happen to hold anything in the equities markets, you know what I'm talking about. But once again, when I see equities down at this rate, I'm looking at bottom-feeding opportunities, folks. I mean, these equities aren't going to stay down for much longer. All right, I mean, we're seeing earnings come in. Of course, Alcoa didn't really kick off for much of a decent earnings season, but we have to take in consideration the spike in the commodity that encompasses their particular product. But let's take a look as some of these retailers come in, as some of these high-end mass retailers, so on and so forth. Then we'll see what's going on out here. But I'm seeing bottom-feeding opportunities. I'm still capitalizing on bottom-feeding opportunities that I've invested in when the Dow Jones Industrials was 11,800. And let me tell you something right now. If you happen to have enough money to legally day trade, yeah, that's right. Thanks to a new government law, you have to have $50,000, all right, or $25,000 on margin for you to legally, through our federal government system, because, I don't know, I guess they blamed the financial crisis on the general investor as opposed to the asshole Wall Street jerkasses that they bailed out with our tax money. But never mind, if you happen to be lucky enough to partake in day trading, liquidity is out there, folks. Just take a look at the choppy charts of every single equities market sector, for Christ's sake. It's unbelievable. Unbelievable. I mean, there is liquidity to be made, and this is where day traders need to start eyeballing these types of potential opportunities. You know, you buy a stock in the morning at so much price, you see it spike up about 20 cents, you sell off, and you go on to the next stock. And you go on to the next one, and you accumulate this liquidity, and once you accumulate it, if you were a smart investor, you go out and you put it in long-term investments, because like I have always said, long-term investment reigns supreme. Warren Buffett, the second, or I don't know if he's the third richest, I don't know what he is now, but he's a rich bastard, all right? This man made all his money exclusively on trading equities and on trading stocks. I mean, that's all this man did. And he became, he's a billionaire. So all I'm saying is, folks, is when I give you this analysis of certain equities, when I give you this analysis of commodities and other such business angles, so to speak, you should just interpret them and use them as a strategy to potentially entertain plays so that the money that you generate, however you generate it, whether it be through labor, whether it be through owning a business, whether it be through just whatever it is, you want to be able to take that money, be able to parlay it somewhere else so it can work for you while you're working to make more. That's what capitalism is about, baby. Do you understand? That's what it's about, and that's why I do this broadcast. So before I get into anything else, I'd like to go ahead and get through the markets. Can we get to the markets here, engineer? I'm all lost. I'm off track. Where the hell am I? Okay, let's get to the markets then. I'm sorry, folks. I'm getting off keister here. I'm trying to get my drinkage situation situated here. I'm trying to do 80 different things at once. You know, I mean, the engineer is just one track, if you understand what I'm saying. So everybody could just please bear with me. All right, let's go to the Dow Jones Industrials, all right? Like I said, when I named this episode, the equities markets were actually increasing. They were increasing on the rumors, given the fact that the Federal Reserve released these minutes, that there was going to be a potential QE3. And I've been saying this, even when the Federal Reserve was saying,
no, we think that the markets are going great. We think that QE2 will be at the end of June. We're going to see a rebound.
And then when, people like myself were saying, well, what about the commodity spike? What about the oil spike? You don't think that's going to influence the potential consumer confidence of this so-called rebound that we're having? It's not going to hurt the potential hiring practices of small businesses and corporations, so on and so forth?
No, we think it's going to be great.
Bernanke, you were wrong. You can look back in the archive. The prognosticator of prognosticator strikes again. And let me tell you something right now. I should be a freaking professor at Harvard or something. You understand what I'm saying, folks? I should be a goddamn professor at Harvard. If you don't believe me, take a look at my archive, for Christ's sake. I prognosticated all this and then some. So anyway, let me go ahead and get to the markets here. We got the Dow Jones Industrials down today, even though we saw a spike in a potential QE3 being implemented by the Federal Reserve. We continue to see a sell-off as the closing bell ended, or grew near, I should say. Dow Jones is down 58.88 points, a percentage decrease of 0.47%, closing out today at 12,446.90 points. We got S&P down modestly today, 5.85 points, a percentage increase of 0.44%, closing out today at 1,313.64 points. NASDAQ took a hit a little bit. Let me tell you, the volatility in all these markets was pretty bad, but, the NASDAQ seems to be weighing down a little bit more than everybody else, but there's a lot of different factors in that, and we'll get to that at some other point, but right now, the NASDAQ is down 20.71 points, a percentage decrease of 0.74%, closing out today at 2,781.91 points. The FTSE, for our brethren out there on the other side of the pond who are investing in the FTSE, it was down today in a bad way. It was down 60.20 points, a percentage decrease of 1.02% on the day, closing out the FTSE at 5,868.96 points. I mean, good God. Good God. I mean, and I actually thought that we were going to close up on the plus side, given the fact that, you got these helter-skelter investors thinking that, the Federal Reserve was going to implement a QE3, even though I still believe they are, even though there's a great debate amongst them. But what really is going to hurt our economy or help our economy is what these scumbags in Washington are doing right now with this debt ceiling. That's what's really going to gauge what's going to happen to the American economy. Because let's be honest, this stimulus package 2 that the Democrats initiated was nothing more than a payback to all the morons that donated to their campaign contribution accounts. And if you don't believe me, you Google up yourself the stimulus package 2 spending, a little itemized statement, so to speak. And you're going to find stupid crap going to the pornography industry, Hollywood. I mean, Captain Morgan, I even think, got a piece of the stimulus package, too. It's stupid. It's stupid. But let me tell you, what's going to happen to our economy is basically solely judged on what these scumbags are doing in Washington. And if they allow America to default, then not only is America in complete and utter economic disaster, but the world could be in potential economic peril if we, as American people, don't force these soulless cash whores in Washington to come up with some kind of an idea that not only increase the debt ceiling, because that's not the only thing at issue here. We have to realize that we have to strap our budget. We can't continue these entitlement programs. We can't continue this unlimited credit card-like spending that our government likes to do. All right? We have to be fiscally responsible. And unfortunately, the Republicans that are supposed to be on the side of fiscal responsibility, they are completely hypocritical in this debate. The teabaggers, the right-wingers, these people aren't for real cutting. They're for cosmetic cutting so that they can win the next election. These people on both sides are willing to throw the whole economic integrity of America for their own bureaucratic political agendas. And I kid you not, these idiots are all ambitious, all the faces behind this so-called debt ceiling debate. These idiots are all trying to vouch for more power in the future and utilizing this to catapult them as a face to do so. All right, let me tell you, the teabaggers, the Republicans, the Democrats, the liberals, they are all out of whack when it comes to this debt ceiling debate. I understand we have to increase it, but to sit here and deny that we have to make we not only I mean, the bad part about it is, not only do the Democrats not want to cut anything, they want to add more spending. I mean, that's the thing. That's what really is just a mind-boggler of mind-bogglers, all right? Not only do they not want anything cut, they want to increase more spending. I mean, it's just ridiculous. I'm sorry. It gets me flustered because, God damn it, I can't believe we have these idiots representing us in Washington, for Christ's sake. But you know what? This is a government made for the people and by the people, and these idiots in Washington are a representation of what's out here in America. I kid you not, whether you want to believe it or not. This is the mindset. These idiots bickering and moaning that, well, you know, we're not going to not only cut spending, but, dude, we're going to increase your taxes. Over here on the left, and you got these right-wingers saying, well, we're willing to cut spending, but we don't want to cut Social Security. We don't want to cut Medicaid, Medicare. We don't want to burden the people that put us in this situation, which is the baby boomers, because, well, you know, they donate to our campaign contribution accounts. Ridiculous. Anyway, and meanwhile, who's here to hold the bag? The idiot American youth that have not only been drugged out of cognitive reasoning with Ritalin and Prozac and all those other pseudo-mental psychologist drugs, all right, that never needed to be in existence, but they've also been dumbed down by the state-funded education system. They've been dumbed down by the entertainment system, for Christ's sake. It's disgraceful. Anyway, let me move on to the commodities. Then I want to take your calls, for Christ's sake. Brent crude is down 33 cents. And for all you milky lickers that don't know what Brent crude is, it's the crude oil that's shipped off to Europe and Asia. All right, it's down 33 cents, a percentage decrease of 28%. Or not 28%. Excuse me. It's 0.28%, not 28, but 0.28%. I'm sorry. I'm sure I let some of the limeys were creaming in their pants. They're like, oh my God, I can go